Good afternoon, everybody, and welcome to the Employer Lunch and Learn. My name is Kelly Garrards, and I work at Career Force here in St. Cloud. I have with today again Corey and David, and we are going to do our Employer Lunch and Learn Webinar 3. At the end of today's session, I will send you both Corey and David's PowerPoints, and I'll send you the web links also for the recorded session. I wanted just to address that we are using Microsoft Teams, and on the right side of your screen, you will see a Q&A box. You can go ahead and put your questions for Corey or for David in that Q&A box, and we will ask those questions of Corey and David. If you see a question there that you like, go ahead and give that a thumbs up, and that just lets us know that there's a little bit more priority on that question. We want to try to get to everybody's questions today, as this is the last in the series of our Q&A. I want to make sure that I give thanks to David and Corey for joining us these last 3 days. It's been a very informative time, lots of useful information. I've had lots of emails from people saying thanks, lots of comments from all of you saying you found some of this information very useful, lots of questions coming back. So Corey and David have been very gracious of their time in addressing some of those questions. At the end of the day yesterday, we had a question come in from one of our employers that was addressed more towards Corey. The question was, what if a PCA goes from one home to another? Is that time considered travel time? So I'm going to ask that of Corey because it was kind of addressed to you during your time. So Corey, can you go ahead and answer that?
I sure can. So that's a good question. So as long as the employer, this employee works for one employer and it's not two separate employers, if it's one employer and he or she is going from, for example, client house to client house, that travel time is compensable and they should be paid. That's what we call all in a day's work. Sometimes a question that comes with that is lunch breaks. What if there's a meal break somewhere in between? So the employer can deduct those, remember yesterday, 30 minutes continuous and uninterrupted. So they can't be like eating and driving or eating and parked and doing paperwork. But if they're completely relieved from duty in between for 30 minutes in between destinations, then that 30 minutes can be deducted. But otherwise, all that travel in between all those client sites is compensable.
Corey, I want to do a follow-up if you don't mind, but this is a question I know that when we've done other events we've heard. And what if somebody has a break in their work? You know, let's say you're going from one client that's and you're supposed to be there from 10 to noon, and then you have another client that's at 3 or 2:30 or something like that. That's at another location. Where you might be kind of punching in, punching out or something like that. How does that work? Same part of the same day, but it might be kind of, you know, the employer's thinking of it as 2 shifts kind of thing.
Yeah, that's a little more case by case. Excuse me, I'm kind of cut off here. That's more of a case by case analysis. So if that's the situation with you, I would encourage you to give us a call, because that's going to vary with how much time's in between and some other factors. So that would be something I probably couldn't give you a blanket answer on something like that. It really does depend on the circumstances and the time, etc. So I highly encourage, if that's the case, and that is the case for a lot of employers, to give us a call and run it by one of our enforcement team members, and they'll let you know how the law applies to your circumstance. Good question.
Awesome. So thanks, guys, for answering that. We did have an employer email me earlier today saying that there was still some confusion as to the requirements when wages are increased across the staff. This employer is a large manufacturer, and typically in April they do an increase for all of their team members across the board. And the increase is posted for everyone to see. So then they're wondering, with this new law, do they need to put a memo on each employee's file, or would the team member need to sign that memo before they're putting that into the file? And they have a feeling that this might be a question for a number of the participants on these phone calls. And so I'm wondering, David, if you could maybe address that for us.
Yeah, good. That's a great question. I think what I heard is kind of 3 different components there, or 3 different issues I want to address. The first thing is the kind of using a memo or across the board type of, when there's that type of situation, across the board increase. So yeah, it's a different than an individual communication, right? But at the same time, the law does require that each individual that has a change in their the terms and conditions that are as part of the notice does receive something in writing. Posting something in a common area would not satisfy that requirement. But what that employer could do, for example, and I think a lot of employers do as a practice sometimes, is put a memo inside the paycheck or the envelope with the pay stubs. That would work. Again, that needs to be in advance of the change happening, but that could be a potential solution. Or otherwise, if it's a manufacturing plant, the employees might not be connected to the employer's email, so they might not have an employee email address. So that would be more difficult. But if you did have employee email addresses, you could send those out by email. If there's another type of electronic messaging system that the employer uses, that could be used. So that's kind of part one of that answering that. The second thing is in the file. So do each of these need to go into the file? And that is, there isn't a specific record keeping method that is prescribed. So the department just says that the employer needs to track all of this information. So I have my original notice, and then I have any changes that have gone on. So again, it's kind of like a living document. And if there was ever a request for this information, if our department ever came and say, I'd like to see Corey Walton's original employee notice, and I'd like to see all the changes, all of that. So it would be up to the employer to produce that. How they keep those records, if it's in an individual file and you're linking that to an individual file, or if you have kind of another method to keeping that, can be all electronic. That's up to the employer to make that decision. We'll get into it today a little bit. We're going to talk more about record keeping. So I will kind of address this again, but potentially at the fastest, the employer would be requested to have produced this information within 72 hours. So typically we don't ask for that information at all that quickly. Typically it's over a number of weeks where a request would say, come back to us with this information in a certain number of weeks, but it's possible that would be as soon as 72 hours. And then the third part of it, the signature. So the signature requirement, just addressing that again, the initial employee notice has a signature requirement. So when I first start, Corey's first starting his job, he's going to sign that notice. Every other, there he is, he's signing it. And then every other notice that he gets, so this, let's say that there's a memo and there's an across the board increase of 10%, and it's in his paycheck, for example. He's really happy, but he does not need to sign off on that. So he doesn't need to sign off on any of the subsequent changes. The employer doesn't need to track those and needs to keep a record that they've keep a copy of the communication, the in writing communication. But only that first notice has the signature. And I'll just note really quickly, that is, I touched on or said yesterday that Minneapolis has their own wage theft ordinance. So I know that I don't think the employers on this part of the session are in Minneapolis, but Minneapolis does have a requirement for signatures on like the continuing on those updated notices, those change notices. So if you are working with workers or in Minneapolis, that is one of the differences of the Minneapolis ordinance to the state ordinance. So hopefully that answered it. If not, please follow up with me later on or throw another question into the chat.
All righty. I don't have any other questions for you guys at this point. So if David, if you want to go ahead and get started with your presentation.
Great. Okay. Just give me a minute here. So what I'm going to do actually, is try to share. I don't normally do this in my presentations, but I'm gonna. Can you see the desktop of? Can you see this web browser, this web page here, Kelly?
I can see it, but it's small.
It's small.
Right,
okay.
Kelly? Yes. Yep.
Okay, I'm not sure how to make it bigger, but I'm just going to spend 30 seconds here going through this. And I think, again, normally I don't do this, but I think being that the employee notice part of this, there's so many questions that often come up with this. I just want to show people how to navigate to the detailed information. So on our page, there's a for business. You click that. Okay, maybe this is, oh, okay. And then employment, scroll down here to employment practices. So again, you know, I wish our stuff was a little easier to navigate to, but we're part of, you know, so we're just one division as part of this Department of Labor and Industry. And then over here on the left side, there's this wage theft legislation 2019 summaries. So believe it or not, this is the most clicked on page of this website that's been in existence for 2 years. I think it's like double of any other page on our total website. So this is a great resource right here. And there's a video on the employee notice. There's a video on earnings statements changes. There's a video on record keeping, as well as fact sheets for each of those things. So there's a great fact sheet on the employee notice. I really like that one. It talks about what are the required elements to have in the employee notice. So if an employer wants to come up with their own employee notice, that would be a great fact sheet to review, because it's going to really lays out in bullet points what needs to be in the notice. Earnings statements changes, as well as record keeping. And then a couple other things on the bottom here that are really critical. This Q&A. So I'm going to click on here and it says Q&A about the new law. And
David,
yes.
Can you just go back and show them quickly again where you found that link?
Sure. So going back, so this says, it's the page that says wage theft legislation 2019 and summaries. And on this left blue column here, it's down here where you click that. So you do have to navigate to that from the for business, which is at the beginning of the website, and then, excuse me, and then workers emailing me, and then you do employment practices, and then you come here. So it might, you know, might not be able to memorize it right now, but maybe you have an idea when you come here and you look around. But there's this Q&A, again, a really critical document here. And there's 52 questions and answers, and these are almost all, maybe at least 2/3 or to 3/4 are related to the employee notice. So a lot of the questions that come up, if you come here and you scroll through here, you're going to find answers for them. We're happy to take phone calls and emails as well. So I don't want to say that, you know, not to do that, but this is a great resource. You also have the other language translations. So if you wanted, you know, your employee notice in Laotian, so I'm just clicking on that, and you're going to have the Laotian. I think it's a little slower. So as you see, this is our Laotian employee notice translation. Actually, this is the summary of the law. So that's not the notice. So we have summaries of the law in each of those languages, and then there's another spot where there are guidance for employees. There's another spot where the translated notices are. The Wage and Hour Bulletin, great place to get a once a month newsletter on updates on everything that's going on with labor standards. So where it says employee notice up here, click there. And this is where those other translated versions of the employee notice are. You can see, you know, Arabic, Karen, Amharic, Oromo, etc., all the way through here. So I'm going to stop sharing this, but I just wanted to give people an idea about where to get this additional information.
So David, do annual merit increases require new employee notice to be created or given to employees? And then what about if they receive a new PTO rate?
So, and I'm going to stop sharing, and then I'm going to put up my PowerPoint as we're talking here. So, annual merit increases would, you know, that would require an updated or a change notice. Anytime a wage rate is changed, the employer is required to give that. So, It doesn't require that an employer start a new practice of. So most of the time, there's some type of employee, like an action. There's different terms, but employee action form or some type of form that an employer is probably already using that's in writing that describes the changes of a merit increase, or if there's a review with the supervisor and then an increase is decided. There's some type of paperwork that's filled out that describes this change. So that can be used. The department isn't requiring that the employer create a new process if there's already something in writing. So they can use whatever form or paper that's already distributed that describes the change and use that to fulfill that requirement. And then the other part of the question was
PTO.
You're right, the PTO rate. So yeah. So that is where we talked about yesterday. One of the things is that an employer can refer to the PTO, vacation or sick policy. That's probably in a handbook, or it's probably in a collective bargaining agreement or some other type of policy document. And then that's going to have that schedule. So you've already informed the employee, and you're changing from the 3-year rate to the 4-year rate, and you're going to get a bump up in your PTO. So that employee already knows that information because they've already received that schedule, that policy. You would not need to inform that employee again that those changes, that they're going to get that bump and increase. If you don't have any such policy to refer to, then there would be a requirement to inform the employee of that change. Does that make sense?
It does. And then we had a suggestion from one of our employers that French would also be a very helpful language to add, since many of our African staff speak French as a second language and English as a third. So I don't know if you could take that back to whomever, but that would be a wonderful addition to a language option.
Okay, I'm writing that down. If by chance that employer that's on would be able to email me that would help me demonstrate the need for that, and I would be happy to do that. And I think Julie, if you're able to email me later, that would help me, and I'm sure we could provide that notice. So thank you for that suggestion. I'm going to try to share the PowerPoint now, and I'll finish kind of where I left off yesterday. And excuse me, I'm going to run through these and move forward to the spot where I was. Okay, past it. Okay, so I think we ended here. And again, if there's more questions about the employee notice, please just keep them coming. But we'll continue on talking about different changes that are related to the this Wage Theft Prevention Act. And then I'm going to pass to Corey when we get about half past the hour. So this is what's currently required on earning statements. And I know a lot of people don't, check stubs, pay stubs. I know a lot of people don't, employers typically, some employers will fill this out and have a practice of doing it themselves. Other employers have a payroll company or accounting person that they subcontract out to that does this work. So I would just encourage you to check in if you're using a third party, that you're checking in with them to make sure that they have updated this information. So this is what's currently required on earning statements, or what was previously required before the new law. And one thing I'm just going to note is this. I'm not going to cover this too much because it was what was already required, but this, excuse me. The second bullet point where it says total hours worked by the employee in the pay period. Just to note, because a lot of questions came up, that's only for non-exempt employees. So if you have an exempt employee, you do not need to track hours worked. So this is what's new for earning statements, and it's a lot of what we talked about with the employee notice. So not similar information, and that's the different rate or rates that somebody is paid, and that would need to be listed on the earning statement. And then if you are doing that allowances for meals or lodging, which again is very uncommon, and the employer's telephone number needs to be added to that earning statement, as well as the address or principal place of business. Probably already on there, but maybe not. Record keeping, again, this was what was previously required for record keeping. And, I think just to note that there's so many different government agencies that have record keeping requirements that you all are aware of, including, Corey's agency, on the federal side, they have record keeping requirements. Department of Revenue has record keeping requirements. Unemployment has record keeping requirements. So I'm just reviewing the record keeping requirements that are for labor standards related issues. So these were the current or previous, and these are the new record keeping requirements. So again, when I'm just referring to record keeping, because questions have come up here as well, we're talking about what the employer needs to keep. This isn't necessarily things that need to, this set of record keeping doesn't need to be shared with the employees. So the hours worked each day and each work week. And this is for all employees at a piece rate. So what was added here is that if there's a piece rate paid, that the employer needs to track the pieces that are completed at each rate. So that can be a bit complicated, especially if there's a lot of different types of tasks going on that are paid at a piece rate, but that is one of the new requirements. A list of personnel policies provided to the employee, including the date the policies were given to the employee and a brief description. So again, this is the one where we had a lot of questions. Well, do we need to give, when are we supposed to give this list to the employees? How does that work? So this is not something, it's not something you need to give to the employees, the list. Of course, the policies themselves are being, when you were, the list includes when they were issued to the employees, but it's not something as a list on itself that you'd need to distribute. But you just tracking what are the personnel policies and when they were given to the employees. If it's something that was previous to this law being passed, you don't need to provide a date. You can just say it was existing or something like that. And then finally, it's that keeping a copy of the notice and any of the written changes to the notice that were provided. So we've discussed that. So that second bullet point notes that potential 72-hour turnaround on a records request. And we're kind of turning from this employee notice, record keeping, earning statement section of our presentation to more talking about the new enforcement mechanisms and aspects of the wage theft law, which are not going to apply to most people here. You could find yourself involved in an investigation or something like that. It's always possible, so we want to prepare people for that. But again, that's most likely what we're trying to do is give people the tools to just stay in compliance and not have any type of investigations, right? So the records need to be available for inspection, and if records aren't maintained, then our department has the ability to use the information we do receive to come up with a determination of the wages based on the evidence. So this one is to note the change. What I want to pull out of this slide is on the first bullet point, it talks about there's the once every 31 days. So that was an existing law, and it states that in Minnesota, all employees need to be paid at least once every 31 days. So that again is existing. We get calls from workers often that say, hey, it's been 3 weeks since I've been paid. And we do tell them you do have to wait 31 days before it then calls back, and you can file a complaint at that point. The law says the payment needs to be made every 31 days. But what was added was that if there's a commissioned employee, they need to be paid their earned commissions once every 3 months. So it still is up to the employer to determine what earned means. So the earned is really, it's typically there's a commission policy, and when the sale is complete and fully paid, that commission is earned, considered earned at that point. But each employer has their own policy, so it's up. But once that is earned, according to an employer's policy, it's now required to be paid out at least once every 3 months. The new law has a different additional retaliation prohibitions that provide potential some penalties if that employers are found to be retaliating against people that are making complaints. And you can see there that the fines are from $700 to $3,000 for each violation potentially. The responsible contractor, there is an existing law related to responsible contractor, and that's for contractors doing work with the state of Minnesota. And what this law did is add the component that if there's certain wage and hour violations, and they're listed there on the screen, types of things we're discussing here today related to wage theft, that employer could be barred from doing work with the state for a period of 3 years. And this describes additional enforcement that was allowed by the department, including inspecting places of employment, being able to apply for an order in district court if their inspectors and investigators are not allowed into the premises, and then the ability to interview non-management employees relating to an investigation. This one is interesting. So now we are required under this new law that if we issue an order to comply, which is part of one of the steps of our investigation process when there's findings, if the department issues this order to comply, we are now required to share that information with any licensing or regulatory authorities that employer, that business would be subject. So as an example, we could think about like a bar, and they would have a liquor licensing agency. So we're now required to share this information with that liquor licensing agency if we were to find violations, these types of violations. What that agency would end up doing with that information is really up to them. Sometimes they may decide to take action based on that and maybe not reissue a license or something, but that's really up to them what they want to do with that. We also need to inform all the employees that would be affected that by the order. So that's another new requirement. The Attorney General's office has additional authority to enforce wage and hour law through this through the Wage Theft Prevention Act. And then, so these were the headline grabbers when this law first passed, and talks about this criminal wage theft. And again, stressing that these are those very, very rare situations, but very serious and very, can be very grave. And when there's an intent to defraud, when the employer is, intentionally defrauding employees, and of course that's undercutting their competitors if they're able to, pay less or have that competitive advantage. So there's that aspect of it as well. And then from the worker's point of view, of course, there's abuse that we're trying to cut out. So these types of situations, it might be a situation where the employer is issuing a paycheck and then requiring in one way or another that the employee cash it out and pay them back, either all or a portion of it. We've seen that. It may be that they're showing, or their books are showing that they've paid this person, but in actuality they haven't. These could be situations where there's labor trafficking going on, things like that. So these are the situations that we're very serious about and we're wanting to address through this law. I'm going to pass this one over, is just talking about the definitions of the employee and the employer, and they're quite broad here under the criminal wage theft. And then you can see that when there is criminal wage theft, again, something that is not your everyday not paying a paycheck, but something that rises to a much more serious intent to defraud, you can see that this new law is quite serious about the potential penalties and maximum fines and potential prison sentences. So another thing to clarify here is that the department itself, Department of Labor and Industry, we're a civil law enforcement agency. So if there was a criminal wage theft case, it would be taken up by a city attorney, a St. Cloud city attorney or Stearns County attorney, and they would take up the case. It's something that potentially, if it came through our department or our agency, we could refer to them, but it would really have to be it's going to have to be the city or a county attorney that prosecutes those types of cases, not the Department of Labor and Industry. So on that great, I always get to end on that really fun note there, but it is serious, and it is something that the legislature made as a priority that they want our agency to address. So we're working hard on it, and here's some additional, again, where you can get the information on our website, and then our phone number and email is right there. My email address is, I'll put that into the Q&A, Julie, if you're able to send me a little email later about the request for the notice in French. So I'm going to stop sharing and let Corey take over.
Okay.
Oh, let's go. Actually, David, we did have one question come in.
Yeah.
They wanted to know if you do a merit increase on an employee who didn't do the form because they were hired before 7/1 of 2019, is a written notice of increase sufficient?
Yes, it would be, exactly. And just to add to the additional thing, that the employer wants to keep a copy of that communication.
Perfect. All right. Thank you for answering that for us. All right, Corey, are you ready to go?
Let's roll.
All right.
He's a tough act to follow, but I'm going to try.
All right. So let's send you live. Why? Okay, which screen are we? All right, let's go back here.
And let me know when you can see my slide.
I think they see the Fair Labor Standards.
Perfect.
You guys want to give me a reply here in the Q&A if you see his Fair Labor Standards in the Q&A? Say yes, say yeah, I see it, something.
Just a little affirmation. Nothing yet?
Nobody wants to talk to you, David or Corey.
Yeah.
Corey, I can see it. I think it's up. Yep.
Okay. They can let you know if they don't see it. That's for sure. So I'll just press on. If anyone can't see the slides, just throw that into the box. But I'll start. I want to make sure I cover everything. So yesterday, everyone, I talked about hours worked under the Federal Fair Labor Standards Act, and I showed you how hours worked issues can become overtime violations. This can be seen as part 2 of that, and I'll tell you how. I'm focusing on overtime violations and how they look in the field. So today I'm going to show you 2 other ways, 2 other things that can slip through the cracks when we're talking about what creates overtime violations under the Fair Labor Standards Act. But first, and just as a reminder, coverage. So again, I'm going to drive this point home. Who's covered by federal law? Because that's often a question, especially with small businesses, whether or not they're covered just by the state or federal as well. So enterprise coverage I talked about yesterday, $500,000 annually gross plus 2 employees. That's that test, the enterprise test. That's met, then all employees in all work weeks at all locations are covered. The individual, if in fact the employer is less than that threshold, individual coverage can apply to individual workers who are engaged in interstate commerce activity, as I showed yesterday, sending emails, ordering goods from out of state, traveling back and forth across state lines, etc. Processing credit cards. All of those activities are interstate commerce activities. So that's just a little refresher as far as the federal law and when it applies. So let's zero in on 2 things today, regular rate and exemptions. So the regular rate is the rate the employer is supposed to use when they go time and a half in overtime past 40 under federal law. What are they taking time and a half of? Sometimes there's a confusion if employees are paid in different methods. For example, maybe they're paid commissions, maybe they're paid hourly rate plus they get a bonus, that kind of thing. So we want to make sure employers are taking time and a half of the right rate when they go into overtime. We see that a lot. So I want to clear that up. And then I'm going to talk finally about exemptions. So which employees are exempt from overtime? Usually it's your salary workers who are supervisors, etc. So I want to make sure the requirements for the exemption, for several exemptions that we enforce, are met. So all of these tie into overtime, because if you get the regular rate wrong, or if you misclassify someone as exempt when they're really not exempt and they've been going past 40 in a week, then there's going to be an overtime liability. That's how they tie into overtime. So first, I always recommend to employers when I used to be an investigator, I used to always walk out the door with this recommendation, or walk in the door with this recommendation, is that when you have workers that are not receiving overtime, right? So you assume they're exempt. Make sure you know which exemption they fall under, right? It's not good enough to say, well, they've always been exempt. I always encourage owners, HR folks, payroll professionals to know what exemption John falls under, or Martha, or Sue. Just make sure you understand what exemption. Just don't assume that they're exempt because they always have been. And we'll go through some of those exemptions. And then finally, that last paragraph is what I talked about during the last session. So hours worked. I won't cover that today. Overtime compliance determined by the work week. Make sure we don't see this as much anymore because everyone's kind of using software. But in the old days, when everyone did everything manually, make sure each week stands alone. So, for example, if you are on a bi-weekly pay period, you can't average those weeks. You know, someone works 35 hours one week, 45 hours the next week. That's not an 80-hour non-overtime pay period. That's a one overtime week, the 45-hour week. So that's each week work week stands alone. And employers, it's up to the employer what to determine their work week is. But once they do it, stick with it. Be consistent. Regular rate. So there's a fact sheet. If she hasn't already, Kelly's going to throw some links in the Q&A. Okay, good. There's a fact sheet, regular rate fact sheets in that Q&A box. I encourage you to go to that fact sheet if you want to make sure you know which rates are to be included in this whole regular rate computation when you're computing hours, or I should say pay for overtime. So if they're paid an hourly rate and something in addition to that hourly rate, you want to make sure you know whatever that addition is, whether it has to be included in the computation or it doesn't have to be included in the computation. That fact sheet will make that clear. But what computation am I talking about? So let's have a real world example. So this is what how the employer should be computing overtime for someone, for example, who gets a production bonus. Now this is a bonus, what we call a non-discretionary bonus. And this fact sheet talks about that. But this is a non-discretionary bonus. In other words, this was a bonus that the employees expected to be part of their compensation package. So those kinds of bonuses should be included in the regular rate computation. So in this week, as an example, the employee paid at $9 an hour, got a bonus of $10, and worked 48 hours that week. So it's an overtime week. What's the computation? First, the straight time, 48 hours times $9 an hour, the hourly rate, $432. That's the straight time earnings. Plus the bonus, $432 plus 10, $442. That's total straight time earnings right there, $442. Now you got to go back and get the halftime. So how do you do that? 442 total earnings divided by 48 total hours equals $9.21. That's the regular rate. So you can see that $10 an hour hourly rate's been bumped up 21 cents an hour by that $10 bonus. So that's what you're taking time and a half for the overtime. It's not time and a half 9, it's time and a half something other than that because of the bonus. So $9.21 is the regular rate. That's the number. That's the dollar figure they average per hour work, including the bonus. So you're going back to get the halftime. So it's times 0.5. That's $4.61. And then that's what you pay them for each overtime hour work. 461 times 8 overtime hours equals $36.88. That $36.88 is the overtime premium. So it's $36.88 plus the 442 is $478.88 due in that overtime week in which they receive a bonus and they're paid $9 an hour and they work 48 hours. So I went through that sort of rapidly, but at least it's on your radar. And this applies if they get, like I said, these non-discretionary bonuses, shift differentials. Sometimes in certain industries, those are used. So I just want to put that on everyone's radar because we see a lot of those issues. This is an example of someone who's paid at 2 or more different rates in the week. You can always pay them time and a half, the higher rate. But if you want to use a method that's legal under federal law, you can use the weighted average method. So this employee worked as a janitor and a cook in the same overtime week, $8.50 as a janitor rate and $9 at a cook rate. 21 hours as a janitor and 26 hours as a cook. So first, the straight time earnings for the janitor hours, 21 hours times 8.50, 178. Straight time for the cook hours, 26 hours times $9 equals 234. And it's 178 plus 234 equals the total straight time earnings at both, including both job occupations, right? 412.50. So you want to go back and find out what the regular rate is. The 412.50 divided by the total hours equals 878. So that was their average. You can see it's closer to the cook rate than it is to the janitor rate because they spent more time at the cook rate. Go back and get the halftime. 878, the regular rate, divided by 0.5, 439 times the 7 overtime hours. There's the overtime premium, $30.73. That plus the straight time earnings is the total they're due in that work week. Again, I went through this fairly rapidly, but if you have any questions or anything, of course you can look at that regular rate fact sheet, but you can also reach out to our agency or me, and just to kind of walk you through this a little bit slower. I'm going to skip this in the interest of time. I'm going to skip the piece rate computation, but there is a piece rate computation for overtime that includes straight time, same formula, straight time earnings divided by the hours divided by 2 multiplied by the overtime hours. It's the exact same formula, but the point is when it comes to piece rate in overtime work weeks, there is a formula. So make sure you're not just taking time and a half, an arbitrary number. This is what I want. Dave mentioned these yesterday, these white collar exemptions, executive, administrative, and professional. And I just want to touch on each one because if there's an overtime issue that's second to hours worked, it might even be the first #1 issue. I haven't been an investigator for a few years, so this may be the #1 cause of overtime violations, but I know it was in the top 2 when I retired as an investigator. And that's misclassification of employees. So misclassifying non-exempt workers as exempt workers, and then when they work overtime, those would be overtime liability work weeks. In other words, back wages would be found due to these workers. So let's touch on a couple of the 3 of these exemptions, and then I'm going to make you aware of some other exemptions that we have. First of all, the DOL fact sheet link is in the Q&A box as well, and that fact sheet has 17A. Is the fact sheet you would go to for a summary of all the exemptions. And then in that 17 series, 17B through G, I think, each individual exemption has its own fact sheet that goes into the weeds about the requirements for that exemption. So I want to make sure you're aware that there's good information on how these exemptions apply individually. But as a whole, the exemptions generally have 3-pronged tests. There's a salary basis test, there's a salary level test, and then there's job duties. The salary level and salary basis is pretty fast. We make a fast determination on whether that's met. The job duties requirement is what requires interviews and finding out what people do on their job. And I used to always encourage employers to do those interviews as well. So for example, salary basis, let's go down the line here. Salary basis, it's guaranteed. So the employees are guaranteed, doesn't go up and down with their hours, but they must get at least $684, that's $684 each week gross for the exemption to apply. Now that's the new standard that went up January 1st. It used to be $455 a week. So if that number sounds familiar, get that out of your mind. Now it's $684 a week. That's the salary, that's the salary level. Let's go back up to the salary basis again, guaranteed, right? They have to get that amount, no matter, it can't be tied to the hours they work or the quality of their work or anything like that. 684. Last prong, job duties. That's the one that requires the employers to stay on top of what these employees are doing on a day-to-day basis to make sure they're reaching the duties requirements. And each exemption has its own set of duties the employees have to be doing in order for that exemption to apply. Just a quick note about this salary requirement. It doesn't apply to there's an outside sales exemption. Teachers fall in a certain exemption professionally usually, and employees practicing law and medicine. So that 684 amount that I just talked about doesn't apply to them. It also doesn't apply, or semi-applies to, there's a computer-based exemption that I'll touch on a little bit later. In that exemption, there's a choice. The employer can meet either the 684 salary requirement or the $27.63 an hour requirement, either or for that computer exemption. But everything else has the 684 guaranteed salary requirement. Real quick, I just want to bring in touch on each duties for these key exemptions. Under the executive exemptions, now these are usually your supervisors, right? These are the ones that are supervising or responsible for others. I put in red the words primary duty because these are the things that this is what they were hired to do, right? It doesn't foreclose, the employer is not prohibited from plugging in an exempt person when, for example, it's Christmas time and there are a lot of people taking time off. So temporarily, that's the key. Temporarily plugging in an exempt worker to do non-exempt work, like a manager at a McDonald's drive-through or something like that, is the easiest example. To do that work momentarily or temporarily and then back to their exempt work for the rest of the year. So primary duties management of the enterprise or customarily recognized department, so they're in charge of something. Second bullet, customarily and regularly directs the work of 2 or more employees, and that should be full-time employees. And the last bullet, they do things that managers do. They hire, they fire, they recommend hiring, firing moves. They promote. If there's someone that needs the day off or they're sick, it's usually this person that has to be notified. So all of those things that come along with being, they write appraisals, they evaluate others' work, all of those things that go along with being a manager. Again, primary duty. They can't do those things every now and then. This must be the central part of their job. That's the executive exemption. Fact sheet 17B goes into more detail about that. Fact sheet 17C, administrative duties, they have their own set of duties. And I put in red office or non-manual work. So these aren't frontline workers. So they're in the office, non-manual. Second bullet, they exercise discretion and independent judgment in matters of significance. So they're not deciding which coffee maker to use. They're making some important decisions on a regular basis. Now, they wouldn't necessarily have to supervise any others. So that's the executive exemption. So this is a different exemption, different duty requirements, but still primary duty. They're doing these things. That's the main part of their job. Here's some examples of job titles or positions that usually fall under the administrative duties exemption. Third exemption I'm talking about is the professional duties exemption. Fact sheet 17D, I put in red, advanced knowledge. These type of workers usually have some degree or degrees on their wall. Also put in red, prolonged course of specialized instruction. So I said usually, not always. There's situations where someone could fall under professional duties exemption and not have advanced degrees, but generally they do. Examples?
So Corey, with these exemptions, do they have to make all of these bullet points in order to be exempt under these?
Yeah, so for each exemption, let's say you're looking at someone who supervises 5 people. So you're probably looking at the executive exemption. You pull out your fact sheet 17B. This is what I recommend. You pull out your fact sheet 17B and just go down the fact sheet. Because as an investigator, that's exactly what I used to do. I used to take these interviews. That's what I recommend. Find out what your workers are doing. And then I would sit down with the interviews and say, okay, so they meet this requirement, they meet this requirement, and you'll have a pretty good idea after you do that. And it take, you got to invest a little time, but it can save you a lot of liability if you get it right. Because if you get it wrong and they work overtime, there's an overtime liability. But to answer your question, Kelly, each exemption has its own requirements that have to be met. And I encourage you to look at those fact sheets because those fact sheets are really good at making clear with the exemptions for the requirements for each of these exemptions.
Okay, thank you.
Here's an example of professional exempt employees, licensed practical, non-exempt professional employees. So these are areas we run into a lot. So LPNs, licensed practical nurses, not exempt. RNs usually, paralegals, legal assistants, non-exempt, lawyers, obviously exempt, engineer technicians, usually non-exempt, engineers, exempt, accounting clerks, bookkeepers, non-exempt, accountants, exempt, and cooks performing predominantly routine mental, manual, mechanical, or physical work, usually non-exempt, chefs, especially with some training, exempt. And here are the exemptions under professional duty in artistic and creative fields. I'm going to spend too much time on that. Here's that computer exemption that I mentioned earlier. It's the newest exemption, and by new I mean it came about in the 90s, I think. So it's not new anymore, but it's the last one, full exemption that was added. Again, I'm not going to go through this language because a lot of this language is above my head, but these are the types of things computer exempt employees are performing. Again, primary duty is the key. And you can read about the computer exemption in more detail in fact sheet 17E.
Hey, Corey, this is
Sure.
Just want to add, this is Dave. Rick, so on the state level, there is no computer exemption or white collar exemption. So if you have somebody that is exempt, that you're finding fits those exemptions, they would still need to, on the state level, if you wanted them to be exempt, they would still need to fit into one of the state exemptions, which they may do. They may fall under, but it's not going to be called the same thing. It's going to be potentially administrative exemption or an executive exemption or a professional exemption.
And this is a good time to kind of highlight if state and federal law overlap like that. Let's say you have someone who does fit the computer exemption, but does not fit any of the state exemptions, then you're going to be required to pay them overtime after 48 state law. So they would fall under our exemption, so we wouldn't enforce overtime for them, but the state, if they didn't meet any of those other exemptions, would enforce overtime for them, and the state standard is 48 hours a week. So that's a good example of where the two overlap, which one you got to kind of pivot to and make sure you understand, make sure you're in compliance with it. And I mentioned this earlier about the either or guaranteed salary, 684 or 2763 for those computer exempt employees. I'm not going to spend any time on this outside sales exemption. So for employees who are, I just said I'm not going to spend any time, and I'm spending time on it. But employees are engaged in making orders and taking orders and making sales outside and away from the establishment. Just know there is an exemption that exists. There are requirements. Fact sheet 17F. There are requirements for this exemption, but no, there is an exemption that applies to those type of workers. There's also an exemption for employees who are paid by commission. The three big requirements is they have to work for a retail or service establishment. More than half of their total earnings must in the representative period, and there's a fact sheet that goes into more details about that. Our commissions, and so more than half of their earnings have to be in the form of the commissions, not whatever base rate they get. And then total compensation divided by number of hours has to exceed 1.5 times the minimum wage, which is 10, I think time and a half, 725, it's 10 something. But those are the three major requirements if this exemption is going to apply. Finally, common overtime violations we run into under the FLSA, using that wrong regular rate. So for example, employers forget to factor in the shift differentials that I mentioned earlier, or the bonuses, or piece rate overtime is calculated in error. Those are kind of things we see fairly frequently. The second bullet kind of brings in what I talked about yesterday, combining hours. For example, employees working at multiple establishments owned and controlled by one employer, or multiple job sites to travel in between, maybe forgetting to include those hours. All of those are overtime hours we see, overtime violations we see fairly frequently. And tipped employees, more an issue in Wisconsin or other states that allow the tip credit, but we also see tip related infractions as well. And here's some more violations we run into. That last bullet, state law, confusion between state versus federal, which in Minnesota means a lot because you have overtime after 48, overtime after 40. If you're subject to federal law and you think you're only subject to state law, that can be an 8-hour overtime violation or liability each time someone works overtime. So just be aware of that overlap between the two.
Corey, do you know what the fact sheet number is for the retail commissioned employees?
No, it's on 17A, but I can get that information to you, or you can Google DOL and 7I, because the exemption falls under section 7I of the FLSA. If you Google DOL 7I, you probably would find that fact sheet.
Okay, and then we had another question come in. If an employer or if an employee is given a $25 gift card, does that amount figure into their overtime rate also?
Doesn't sound like a gift card, no. Go to that fact sheet regular rate to make sure I'm right, but that doesn't sound like something that we would include in a regular rate. That's like a birthday bonus out of nowhere.
Yeah, I know some of our employers give out, like at Christmas time, they'll give their employees like a $25 Christmas grocery card from one of our grocery retailers as a Christmas gift kind of thing.
No, that's not includable. You don't have to include that in the regular rate. Yeah.
And then we had one more come in. If we pay a non-exempt employee commissions, do those commissions need to also be included in the overtime rate of pay?
There's a formula. If you get that right fact sheet, I can send it to you, as a matter of fact, Kelly, so you can get it out to everyone. There's there's a formula you use to compute overtime if your employees are commissioned employees, and so I'll send the information on how to make that computation. You want to get it right.
Alrighty, and I'll send that out in the email to all you guys. I'll get those from Corey and put that in the email I send out to you later today. We add the gift certificate to the paycheck to tax the amount, was the response we got back.
Oh. Would you repeat that one more time, Kelly?
So the employer with the gift certificate, they're saying that they add the gift certificate onto the paycheck so they can tax the amount.
Oh, read that regular rate fact sheet. That's a little twist. That's a little twist. Yeah, I thought they meant just handing them a gift card or something like that. Yeah, but yeah, that's a twist.
Alrighty.
Yeah. Anything else?
Not right now.
Okay, I'm gonna stop sharing then.
Any other questions from our employers?
Kelly, you can take me down from the screen. I mean,
what?
Put David back up. He's younger.
We got one more, Corey.
Okay.
In a follow-up to my question, we are a retail business, so would this change his answer for me?
Yeah, so you have to meet the definition of a retail or service establishment. I'm assuming they're talking about the commission exemption, the 7I exemption.
Correct.
Yeah,
I think so too.
Yep, they have to meet the definition of a retail or service establishment, and those definitions will be included with what I send to you. Okay. So the definitions are pretty specific, though.
Okay, so going back to that fact sheet and making sure that you're really looking through that and reading through everything very carefully.
Yeah, the 3 big requirements. That first one is they have to be a retail or service establishment. So clear that first before you even get to the other stuff.
Okay.
Yeah.
And then our employer with the gift cards is saying that, to their knowledge, they need to record the gift cards on the wages, is what she's saying, that they believe that they need to do that. So that's why they're doing it.
Yeah. You know, it's starting to sound like it might be something that might have to be included. It really does. It sounds like it's part of their compensation package when it's phrased like that, as opposed to handing them an envelope and a card and say, here's your gift certificate, nice job. That's completely discretionary. The other one sounds a little different. So
I think that is either the Minnesota Department of Revenue or IRS requirement.
Oh, yeah, I didn't know
related.
that. Yeah, I didn't know
believe
that.
So. Not sure though.
Wow.
Okay. All right.
Great questions, man. Great questions.
Yeah.
See, this is why I like doing things with Kelly's group. I mean, you don't get questions like, what's the minimum wage, federal minimum wage? People know that. These questions are like in the weeds questions, things that make you want to think.
It gives us an opportunity to ask questions our employers normally ask us, and we don't always have the questions for that. So I want to thank Corey and David for joining us this week. I appreciate their expertise and all of this information that they've shared with us. As they both stated, they'll send us out the PowerPoints, and I will get that out to all of you along with a recording of today's session. You should have received the webinars from Tuesday and Wednesday already. I've emailed that out to you. Wanted just to give you guys a quick information on our initiative with Coursera. If you have not heard of that, I would encourage you to check out careerforcemn.com/Coursera. It is an initiative that we have with the Minnesota Department of Employment and Economic Development. We've teamed up with Coursera to offer free career-focused training. I'm sorry, I'm having trouble talking all of a sudden, with with a bunch of top-notch universities and colleges across the state or across the country to offer courses. These universities are things like the University of Minnesota, Harvard, Yale, the University of Illinois. These are free courses for you to take. All you do is need to sign up through our website, and these can be for anybody in the state of Minnesota. So please feel free to check that out. It's a free opportunity for you to upgrade some of your skills. So again, thank you guys for joining us. Thank you, employers. And
hey,
I
Kelly,
will send that. Yeah.
Real quick, that fact sheet for 7I, the commission is fact sheet number 20. I couldn't stand that. I couldn't remember, so I just looked it up.
7I, fact sheet number 20, you guys. Whoever was asking that, I can't remember who it was now, but there you go, Corey. Corey couldn't remember. He just looked it up for you.
Yeah, I'll still send it to you, Kelly.
All right, thank you. I don't know if they're still on or not. So,
Kelly, thanks for having us this week. It's been great. We appreciate it.
Absolutely.
Not a problem. Thanks, everybody. Have a great day.